Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to do our midweek wrap-up, going over some technical analysis plays that we called out publicly to you guys on the YouTube space, going over where price action currently sits at now, breaking down fundamental factors to be paying attention to as we finish off the remainder of the week. If you guys enjoy these insightful and educational video breakdowns coupled with the technical analysis showing you guys the accuracy of what we provide here at CYPRX on a consistent basis. That's the key, right? Consistency is key. And we've been continuously showing you guys how the strategy works and plays out across the board on various different asset classes. So if you enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. So first, we're going to cover fundamentals. We're going to then go over the recaps from previous video breakdowns that we gave you guys, then go over where price action is at now, talk about upcoming fundamentals and how they could either positively or negatively impact risk assets, and then go over price predictions. I will leave timestamps in the description down below so that way you guys can sift through for those impatient individuals that just want the price predictions, okay? Don't want the educational value. I get it. Some people are impatient and you just want to know where your digital assets are going to go, right? Okay, so anyways, showing you guys that we gave this information to the private community members well in advance before we gave it to the general public on YouTube and on X. Here are some screenshots from the XRP analysis and HBAR analysis. So here's HBAR right here, where we were projecting HBAR to see a continuation buy move above 11.5 cents, where we sent this message out to the private members. HBAR was roughly at around the 0.1138 psych level. You can see that we were looking for some continuation moves up above 12.5 cents. We got those play out over the past couple of trading sessions. And then if we scroll up here, you can see our XRP analysis as well. We were looking for some deeper retracement opportunities down into the 58-cent range, which we got, for a retracement up into the high 60-cent range area, which we got as well. Now, if we go over and we look at the YouTube space, you guys can see this video put out 2 days ago to you all. Same scenario plays where we broke down technical analysis when XRP was roughly at around 62 cents. And we had mentioned that if we could have a sustainable break and hold above the 62-cent threshold on XRP, that we would be targeting the high 60-cent range. You guys can see that technical analysis here on the YouTube channel. So publicly making these call outs to you guys as well. Confident within our own analysis, confident within how accurate these delta zones are that we give to our private community members, just to show you guys, again, the level in which we trade with here at CYPRX. Now, going over to the XRP charts, you can see that we did have that sustainable hold above the 62-cent threshold, and we did come and meet the overall target expectation of the high 60-cent range. Ideally, we were looking for 67 cents to be met. Price stalled out, and sellers started to come in at around 67 cents, so we did not meet those thresholds yet. However, we did call out the high 60-cent range. Now we are seeing a slight retracement. Given the US data front ahead, we are going to be giving some call outs as to where we could potentially see XRP price over the next couple of trading sessions. Heading into HBAR real quick, okay? HBAR, same thing. This is from that same video breakdown. Roughly, I want to give you guys some timestamps so you can just go back and check us, right? So on this specific video breakdown at roughly around 10 minutes is when we called out those high 60-cent ranges on XRP. And then on the same video breakdown, roughly at around 15 minutes is when we called out those higher price levels on HBAR, breaking above the 11.5 cent range, looking for a slight retest and for price to come up and revisit the previous highs or head towards 13 cents, right? And on HBAR, you can see where price action sits now. I haven't removed any of my draw links, right? So you can see those continuation buy moves here playing out to the almost T of a degree. Let's get rid of that. Let's pinch this up a little bit so you guys can see better. And you guys can see that those 13-cent ranges were almost met to the T before price started to sell off and sellers started to come in. Where we currently sit at price action now is back below the 12-cent range. So both trade ideas, again, giving you guys insights ahead of the curve, came into fruition. Now let's talk about what is on the data front this week and how we could see price action react. So in this post, I said, ideally on the data front, for us to see continued risk on market mood, we would like to see as risk asset investors, weak US dollar below the 103.800, which is where price currently sits today, way below that. We had a sell-off today, a sharp sell-off on the dollar, which I'll go over in just one second. Dovish Fed speakers, especially Jerome Powell, which is set to come out tomorrow, where he's testifying in front of the House committee. Downbeat U.S. data, services PMI figures, which slightly we got a lower figure today from previous readings, but we're still above that 50 grade mark, which is still showing signs of optimism within inside the U.S. economy. So we'll just go over that real quick. No new fear, uncertainty, and doubt driving demand for the dollar safe haven, and lower non-farm payment. Lower non-farm employment change. That's a mouthful. Figures signaling weakness in labor market data on Friday. Be reactive. I mentioned to you guys if we get the opposite, right? In case we see a turnaround in risk market mood sour. So this will be a risk off market mood if we have these scenarios play out. Stronger dollar back above the 104.00. Upbeat data higher than forecast or previous services PMI figures, which we're still seeing strength in the services figures. However, the data did come out lower from previous readings, which is why we saw that sharp sell-off today in the dollar. Hawkish Jerome Powell on Wednesday and Thursday. Upbeat labor market data, non-farm employment coming out higher than forecast or previous on Friday. Will most likely, again, these scenarios right here would most likely lead to a pullback in risk assets, intraday risk off market mood with dollar stronger and weak XXX USD pairs, right? So just be paying attention to these factors, be reactive. Again, just always trying to give you guys insights so that way you all can pay attention ahead of the curve, okay? Now today, what did we see? We had the ISM services PMI figures come out with a slight downbeat figure from previous readings and from the forecasted readings. You guys can see the previous readings were 53.4. The forecast was 53.0 and the actual reading came out at 52.6. We also had some downbeat factory orders that came out below previous readings and below the forecast, which created a sharp sell-off today during the New York session on the dollar. You can see that here is that sharp sell-off. We're on a line chart at the beginning of the New York session. The dollar was hovering at around 103.9, and you can see that sharp sell-off due to the downbeat data that came out today, coming back to revisit either these previous lows at around the 103.6 before finding some stability or potentially even breaking back lower, depending on how Jerome Powell's speech comes out, heading back down towards the lows from the previous upbeat non-farm employment change data that came out on February 2nd, which again, we'll go over in just 1 second. But again, remember in the post, we mentioned to you all one of the catalysts we wanted to see for a further risk on market mood was downbeat US data services PMI figures. Now, ideally, what we wanted to see was this data come out lower than the 50 grade mark and below previous and forecasted readings. We did not get that. We did get a lower than previous and forecasted readings, but we're still above that 50 grade mark. And here you can see it says anything above 50 indicates industry expansion, right? Anything below indicates contraction. So yes, we did see some expansion today, albeit the reading did come out. You can see here, reading this fundamental, clicking open these articles and actually familiarizing yourself and educating yourself in the space with daily fundamentals and what moves these markets. You can see that in February, the services PMI registered at 52.6%, which is a 0.8 percentage point lower than January's reading of 53.4. So we did see a slight decline. However, it is still above that 50 grade mark, which is still in healthy or optimistic ranges. All right. So I'd say that today, albeit, yes, we did see a downturn in the dollar. Now the focus needs to shift more so oriented towards Jerome Powell's speech and testimonial in front of the House committee on Wednesday and Thursday. And then we need to focus our attention on how that non-farm employment change data comes out on Friday. All right. So with that being said, let's get into some scenarios that could potentially play out now that our targets on XRP have been met of the high 60-cent range, and that our targets on Hbar that we called out in advance of breaking above 11.5 cents to come and revisit these potential highs, digging into that 13-cent range, have also been met. All right. So let's cover a scenario where we see, let's go over to the post, where we see the ideal scenario play out as risk asset investors, where we see weak US data. So we got kind of a decline in PMI figures today, albeit I don't think it's going to have too much of a major impact. Dovish Fed speakers throughout the remainder of the week and dovish tones from Jerome Powell. And then we also see lower non-farm employment change figures signaling weakness in the labor market. So let's cover that scenario first, which would most likely prompt, again, a risk on market mood, support cryptocurrency momentum, i.e. bullish intraday moves or higher prices on digital assets to continue the bullish momentum and weigh on the United States dollar. So again, let's cover that scenario. Ideally, what we would want to see is the dollar break these previous lows, heading back down towards the lows from the upbeat non-farm employment change, i.e. entering back into this low 103.00 psychological level range, potentially even breaking the 103 and completely smashing through the previous low here, where we did have that upbeat non-farm employment change, looking at the dollar, making some type of price action like this, give or take some slight retracements for better premium sell positions, breaking down underneath of these previous lows and heading back down into this range. This would be the ideal scenario to see a continued risk on market mood, to see further weakness in the dollar and further strength in riskier assets like crypto. Okay, so in a scenario like this, where we have all of these fundamental catalysts for a risk on market mood play out, ideally what I would like to see on XRP, again, giving you guys some quote unquote supportive areas. I hate that terminology. Psychological levels where I will be looking and continuing to be a buyer above still remains. Anything above 55 cents for me will be my deep retracement scenario. So on XRP, it's looking like we are creating a significant amount of liquidity underneath of these lows. I wouldn't be surprised if we did see some type of liquidity grab or some type of bearish candlestick shot grab to the downside. So the lowest level before I reverse my bullish bias will be if XRP in scenario number one can retrace down to these lows to better position ourselves for deeper retracement buys for price to reverse back to the upside. Scenario number two is if we can come back and revisit the 62-cent threshold, we can maintain bullish price action above to hold some stability and reverse back to the upside. And then scenario number three would be continuation moves if we can break above these previous highs and we can see further buy continuation moves up into the high 60-cent range, potentially even revisiting our original target of around 70 to 75 cents. Right? So this would be the most ideal scenario for risk on market mood continuation on XRP. As long as price is above 55 cents, I will continue to look for further dollar cost average positions if we see deeper retracements and some potential initial leverage buy positions for intraday trades if we can see some deeper retracements, either down into 62 or 55 cents for further or higher prices. All right. Remember that back when we gave you guys these initial targets, i.e. the high 60-cent range, when price was around 62 cents on XRP, this took almost 2 days to play out. So this isn't just going to happen overnight. It's going to take time. It's going to take some intraday trading sessions, and it's also going to fall in line with how the data and Jerome Powell's tone comes out as we finish off the week Wednesday, Thursday, and Friday. So just be cognizant of that. Now, let's go over the opposite scenario where if we see a risk off market mood, right? Strong dollar, i.e. dollar potentially doing the opposite of what we just analyzed, where we do come back into these discounted ranges where we had that upbeat non-farm employment change. We see the dollar dig deeper to better position themselves for buys. We see the dollar break back above the 103.9 and make its way back up towards the high 104s, potentially revisiting this previous high here, maybe even breaking, worst case scenario for risk assets, the 105 psychological level. All right. In a scenario where we see this play out, coupled with this data, where we see hawkish Jerome Powell's speech, upbeat labor market data, non-farm employment change coming out higher than forecast or previous, and the market fading out the slight decline in services PMI figures that just recently weighed on the dollar, a scenario that we could see playing out where I will reverse my bullish bias on XRP. Let's go to the higher time frame so price action is a little bit more clearer. Would be a revisitation of the previous scenario that I gave you guys. So again, ideally, the only time that I will reverse my bullish bias on XRP and flip to a more bearish tone or potentially look for lower targets is if we can break the 55-cent threshold and correct the vast majority of this previous bullish move, right? So if we can break the 55-cent threshold and close bearish below it, the next initial target that I would be looking for on XRP would be anywhere between 50 to 48 cents. That is, again, if we see all of these fundamental catalysts playing out, dollar strong, right? Risk off market mood, and XRP breaking below 55 cents with the bearish candlestick close on the higher time frame, digging down into these lower demand regions from back on February 1st, correcting more of this overall previous bullish move. Okay. So bullish targets on XRP out of the way, given the market sentiment that could potentially roll out the remainder of the week, and bearish targets set to come out potentially given the fundamental factors and the US data front on the remainder of the week to be paying attention to. Again, just make sure that you guys are tracking this stuff on an intraday basis if you care, right? Why is this stuff important? I'll just go over that real fast again, because think about it, where price action is at right now, okay? Looking at the charts, let's just clear some of this jargon up. I hate all these lines on my charts. I get so disgusting. This is why I don't trade with indicators. You don't need magic indicators. You just need price action, psychological levels, and a firm understanding of fundamental impact, okay? Obviously, of course, in the kahunas to take the trade and expose your capital if you see that it's fit and it delivers a sound risk to reward ratio, right? Now, we understand that Jerome Powell, most likely based off of his previous remarks, are going to come out somewhat with a hawkish tone. That tends to weigh on riskier assets. So again, understanding that if you have capital reserves on the side, this is not financial advice. This is the approach I would take. You could do one of two things. You could implement some capital now in case you're afraid of missing out on a bullish move or a continuation move to the upside. So splitting that capital in half, keeping some on the sidelines to better dollar cost average position in at lower prices in case we do get those hawkish comments and we do see that sharp sell-off correcting more of this previous bullish move on XRP, digging down into the 55-cent range to potentially even 50-cent range for better buy positions and more accumulation of coin, right? That's just my personal opinion. That's the way that I would approach the market. Moving on to HBAR, okay? Given the same scenario plays real quick, I'm going to try and cover HBAR just a little bit faster. As long as price action is above the 11 to 10 cent range, we're going to continue to target and see if price can dig into the high 13s to potentially 14-cent range, give or take some slight retracements to retest previous demand ranges. Ideally for a risk on market mood, as long as price action, now that we've broken above this previous high, we want to see price hold above this demand range here. So anywhere at around 10 cents. I will remain bullish on HBAR as long as we can hold above that significant psychological level. So the previous level that we were looking for price to hold above was 9 cents. We're going to move this up now that we've created a new intraday high to about 10 cents. So scenario number one would be a deep retracement back down into 10 cents to look for further buy positions to take price higher up into those 13 cent to 14 cent ranges. Scenario number two would be a slight retracement back down into around 11.5 cents for further buy positions. And scenario number three would be buy continuation moves from where we currently sit now if we break these previous highs and we dig higher into the 13-cent range. This would be if we see that continued risk on market mood and scenario number one play out that I mentioned to you on the X space. Scenario number two, intraday, as the week rolls out, and if we see the opposite, i.e. risk off market mood, hawkish Jerome Powell comments, and upbeat US data that drives strength back into the dollar, prompting a risk off market mood, I will reverse my bullish bias if we can break bearish with all of those fundamental catalysts playing out below the 10-cent range, and we can close below it with a retest and a bearish continuation candlestick move back to the downside. I will then reverse and be targeting 9 cents as the first bearish target for some potential better buy positions to come and revisit these previous demand ranges. And if at any point in time we break 9 cents, I'd be looking for a much deeper retracement and correction of this previous bullish move for price to dig down into the low 7s to come back and revisit the February lows. All right. So buy scenarios on HBAR, given risk on market mood continues. Sell scenarios if the market mood sours and we see risk off, dollar strength, driven by those fundamental factors that I mentioned. Many blessings to you guys. Make sure that you all are tapped in. All of this technical analysis in detail on multiple different digital assets, not just HBAR and XRP, are given in our private community with full fundamental breakdowns, with dollar cost average positions, all given ahead of the curve. As always, if you guys want to tap into an accurate community that is logical and brings sound fundamental and technical analysis principles, no hopium, no hype, just straight logic, understanding, and education in our private community, again, consider joining. I believe now we had 2 more people since the last time I updated the number. So there's about 94 slots left in the monthly membership section. We are cutting access off at around 200 members. So make sure that you go grab yourself a spot. You can by visiting CYPRXtrading.com. If you guys want access to our in-depth course material with over 80 hours of study and video content, then you guys can visit CYPRX.teachable.com, where we offer our mentorship program that gives you an inside perspective as to how we approach technical analysis, psychology, and fundamentals to apply that to a strategical approach and a strategy that is sound and logical when approaching these markets. Many blessings to you guys. As always, be cognizant, be aware out there. Smash that thumbs up button, especially if you've been following along with these accurate call outs. Again, no funky indicators, no freaking magic Fibonacci telling you guys that price is going to meet some magic spiral number, whatever the freaking crap people be touting to people on social media. It's insane, right? Just logic, fundamental principles, and understanding that 95% of the digital asset transactions in this space right now are due to speculative day trading. Now, obviously, of course, you guys know, if you watch any of my research, I'm a firm believer that in the near future, that will all change. The cryptocurrency market all as an entire whole, and especially the utility-driven assets that provide real-world value, will decouple from the basic, economic layout, and we will see a massive utility bull run. But right now, that is not happening. We have to understand that there's opportunities to be made in the now via intraday price swings. And here at CYPRX, we take advantage of that. If you guys want to take advantage of that, you all as well can join us. Many blessings, be cognizant, be aware, and I'll see you guys in the next video breakdown.